Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. Today is Monday, June 14th, and in today's episode, we're going to look at Bitcoin and remittances. We're going to dig into the data of what's happening to remittances into Nigeria and see how Bitcoin can impact remittances into other countries like El Salvador, where it is now a legal tender currency. We're also going to look at what the bond market is saying about the US inflation. There's some contradictory price action between what inflation readings are saying and what the bond market is showing us. We're going to dig into that as well. And last but certainly not least, we're going to look at the S&P 500, which reached a fresh new all-time high last week on the back of a Federal Open Market Committee meeting from the Fed, which is happening this week. This and more in today's show. Grab your coffees. It's going to be a good one. Starting as we usually do with Bitcoin, we see that last week was a positive one, ending up 8.95% at $39,013. If we zoom into the daily price action, we'll see that actually the bearish flag that we had highlighted last week did in a way head fake that it was going to break to the downside, but it quickly recovered. And in fact, the big rally that came on Sunday was very much helped by a tweet from Elon Musk, which I'll put here in the back of your screen. And in the tweet, it says that Tesla only sold 10% of its holdings to confirm that Bitcoin could be liquidated easily and without moving the market. And he also mentions that when there's confirmation of, in his view, reasonable clean energy usage by miners, Tesla will resume allowing Bitcoin transactions. So again, we're seeing that the tweet came through at 2 p.m. If we look at it on the 4-hour side, we see that this was around the time where Elon Musk tweeted right around here. So you see that it did one, fresh new leg higher on the back of the tweet. So interesting to see how some, activity by a few prominent investors can still, in a way, impact Bitcoin markets. Now, moving on to a different topic, the news from El Salvador adopting Bitcoin as legal tender and what it could do to remittances into the country is shining the spotlight on how Bitcoin is being used for remittances worldwide. And a great example of this is Nigeria. So as per the article that you have behind your screen, recent reports indicate that US dollar remittances into Nigeria are down around 27.7% this year so far. The Nigerian government sets the exchange rate for their local currency, the Naira, versus the USD for all official incoming remittances. The rate that the government sets is about 17% lower than what Nigerians can get for dollars in the open market. This means that Nigerians abroad take a 17% hit or loss when they use the official remittance channels to send dollars home. Now, does this mean that Nigerians abroad are sending less money home? No, it does not. Where is the difference coming from? If you look at the Google search trends and compare the interest in search between the words Bitcoin ATM and Western Union, you see that not only has the popularity of Western Union been declining over the last 3 years, the popularity of Bitcoin ATMs has been soaring. Not soaring, but it has been essentially going up in the same period. We see that the interest in searches for Bitcoin ATMs actually first surpassed the interest in searches for Western Union early in this year, in January of this year, which coincides with the time at which dollar remittances into Nigeria start tapering. So very interesting to see that Bitcoin ATMs and Bitcoin in general are now more popular search terms than Western Union in Nigeria. Now, this is happening despite the Nigerian central bank's efforts to get Nigerians to sell them their dollars at a discount. Nigerians are finding a better and more efficient way to remit money home using Bitcoin and peer-to-peer exchanges. Bitcoin is eating Nigeria's remittance volume, and it's benefiting Nigerians. Now, how El Salvador navigates the relationship between its banking system, its citizens, and Bitcoin could act as a playbook for other nations to follow. In one country, the change is being brought about by their government. In the other country, citizens are making the change despite the government. A fascinating case study to observe. Now, turning our eyes back to the market, we see that there was a very large increment in short positions over the last week at Bitfinex. And here's the weekly chart. Now, 359% increase in short interest at Bitfinex. There are also reports that there is a large buildup of Bitcoin balances in Bitfinex relative to their recently traded volume. And this is courtesy of CryptoQuant. And as you can see, essentially, what this means is that there is too much Bitcoin sitting on Bitfinex relative to the recently traded volumes, which means that somebody could be getting ready to place a big sell order, and therefore they're putting on this very large short position. So it is interesting. And the technical backdrop for Bitcoin, going back to the chart, if we just go back to Bitcoin's chart, we see that on the technical side, until we get past this 42,000 level, the technical formation still looks quite fragile. So again, this is shaping up to be a pretty interesting week, so do expect some volatility. And we'll talk about what we can expect further into the week in our What's Ahead section. Moving over to the S&P 500, we see that the index reached an all-time high last week of 4,245 points, up 39 base points for the period. But very interestingly, the Russell 2000 index, which we have been following here for a while, blew past that very important 2293 level. That was the level that Mr. Tom Lee, the head strategist at Fundstrat, was waiting for a weekly confirmation over this 2293 level to, in his view, as a confirmation of another leg in a broad-based rally in equity markets. So as we can see, it really soared past this, and we have been tracking this for weeks now, and finally got the confirmation that Mr. Lee was waiting for. Now, what we see here is also consistent with the price action that we saw in the NASDAQ, which is, again, within just points of its all-time high, after having been disfavored somewhat by this industrial and commodities rally that we were seeing. This trend looks poised to continue in the coming days unless it is interrupted by the Fed, which has an FOMC meeting, which we'll cover later today, this week. Now, as we covered in the last issue, the consumer price index reading for May was essentially at over 5%, and it exceeded analyst expectations. Now, if we contrast this with what is happening in the bond market, we get a very different view from the bond market. The bond market is essentially, the yields in the US Treasuries are dropping significantly on the back of these higher inflation readings. So, and just to give you some sense of how big the moves were on the yields, look at the drop on the yield of the 10-year note. It was down 6.28% at 1.43%, which is the yield itself, but that interest rate was down 6.28% for the month. Looking at the 30-year, it was also down significantly, down almost 4%. And the yield on a 30-year note in the US is basically 2.15% right now. So this dynamic is contradictory as higher inflation puts upwards pressure on bond rates. But investors in the bond market are expressing their views and saying that they are seeing something different. The price action essentially that we're seeing means that the bond market agrees with the Fed's view of transitory inflation. Now, too many investors, if we just go back to the 10-year, the yield on the 10-year, too many investors rode the wave from about 50 base points to about 1.5. So that is a very healthy return on that trade, and they might be capping some of those or taking some of those profits. In what many seem to believe is peak inflation, which is what we're seeing in May. Some market observers have referred to the readings that we're seeing in May as what will be referred to as peak inflation. So it also appears that anybody that was short these bond positions are preemptively closing them out to prevent getting caught off guard by a sluggish inflation reading or a strong jobs report. Both of those would essentially, both of those would mean that the Fed essentially has to stop keeping interest rates low. So all eyes would be on the Fed's Federal Open Market Committee meeting, which happens this week, and Jerome Powell's speech, which is this Wednesday. Moving over to gold, we see that gold had its second consecutive week of losses, now actually looking like the third week, looking like this week might be a third week of losses. But last week it closed down 70 base points at $1,876 per ounce. Now, this price action for gold and why it's coming under pressure might have something to do with how it's being impacted by this transitory inflation narrative. As we've covered already, some of the major commodities are down significantly from their highs. Let's take a look at lumber. Lumber is down significantly from its peak. And if we look at copper, similarly, it's down quite a bit from its peak. So this might be impacting gold as we see there's a downtrend in commodities in general. Gold might have some headwinds or continue to see some headwinds if this narrative of transitory inflation continues to pick up steam. Moving over to the FTX DeFi index, we see that both the FTX index and Ethereum were down last week, which is a divergence from Bitcoin price action. So on the DeFi side, the index was down 14.19%, closing at 8,584 points. And on the Ethereum side, Ethereum ended up the week down 7.38%, closing at $2,510. Now, there continue to be articles around essentially how Bitcoin or how the view around crypto is shifting. And this is coming, again, from mainstream media, as we've been highlighting here in the past. There continues to be coverage of DeFi and Ethereum on financial media, which is, again, something that is rather new. Most of that coverage had been dominated by Bitcoin until recently. If we look elsewhere in the DeFi or stablecoin ecosystem, we see that stablecoin balances continue to soar. Here in the back of your screen, what you have here is the number of USDT. So these are tether addresses with balances over $1,000. And we see that essentially, or holding over 1,000 tethers. And we see that number on Tether alone is currently sitting at around 300,000 addresses. Now, if we consider the fact that all other stablecoins combined are about 70% of Tether, and we assume a similar distribution on those balances for those addresses, that would mean that there are now around 500,000 unique wallets carrying a balance over 1,000 stablecoins. At the current pace, that number seems to be doubling every 6 months. So again, very interesting trend to keep our eyes on. Moving over to our Bitcoin mining difficulty analysis, the last difficulty adjustment for Bitcoin was a historic one. In the early hours of Saturday morning, we saw miners signaling for Taproot exceed 90% for this difficulty epoch. In other words, Bitcoin's first protocol upgrade in 4 years has been locked in. So way to go. That means that starting in block 709,632, which is expected in mid-November this year, the new Taproot rules will go live on Bitcoin, enhancing Bitcoin's scalability and privacy, as well as paving the way for future upgrades. So very exciting to have Taproot now locked in. And moving along to the other, to the mempool, we see that the mempool is essentially still at pretty reasonable levels. The adjustment that we just talked about brought down our difficulty about 16% to 21 terahashes. And as we're seeing in the back of your screen, the mempool is still relatively clear with fees of about 20 sats per VByte, usually more than enough to get your transaction into the next block. Now, as always, we leave you with what's ahead for the week. We have a lot of economic data coming out of the US, and one important key data is the producer price index, which comes out tomorrow, Tuesday at 8:30 a.m. Eastern. The expectations is for a 0.6% increase. Now, if the fading inflation thesis is at play, markets would likely cheer any increase below 0.6%. The producer price index readings are referred to by some as leading indicators for consumer price indexes. So that's why this number is important this week. Now, moving on to the Fed, the Fed's Federal Open Market Committee meeting starts on Tuesday and ends on Wednesday the 16th with an announcement at 2 p.m. and a press conference by Jerome Powell at 2:30 p.m. Eastern on Wednesday. There is a high potential that press conference will move the markets. The bond market, as we've discussed, is agreeing with the Fed. Many investors with short treasury bond exposure are now covering their positions. This is consistent with some market observers calling the May inflation reading peak inflation, as we discussed earlier, and expecting inflation to fade after that report. Look for bond yields to rally higher if we continue to get inflation readings over 2.5%. This would be consistent with the fact that, this would be consistent with what we are seeing in lumber prices, which have been in free fall over the last 3 weeks, as we just highlighted. Over the last 21 days, lumber prices are down by almost 33%, from about $1,500 per contract to about $500 per contract. Lastly, on Thursday, we get an industrial activity leading indicator in the Philly Fed Manufacturing Index. The consensus is for a reading of 31.6, and the Fed would like to see a higher number, signaling that employment and industrial activity are picking up. The market may celebrate a number that is lower, as it means that the Fed will need to keep supporting the labor market by keeping interest rates low. So lots of data coming out, lots of very interesting trends are coming together for this week in Bitcoin. So it's likely going to be a very interesting week as always. We'll keep you updated with any relevant news right here at the Bitcoin Economic Calendar or through our social media handle at Hodl with Lennon. If you enjoyed today's show, if you have any questions or comments, I welcome you to put them down in the comment section. We'll answer them and try to include the comment in the next issue. If you learned something or if you liked our show today, we welcome you to like it, share it, and subscribe to our channel. And if you don't yet have a Ledn account, I welcome you to check out ledn.io and see how you can start earning 11% APY on your USDC and up to 6.1% on your first 2 Bitcoin. We also have our loans starting at 9.5% interest for your Bitcoin-backed loans if you need cash but don't want to sell your Bitcoin. So have a great one, everybody. Hope you enjoyed the show and see you next week.